All right. Well, goodwill, I mean, how do you write it down, right? What if it loses value? Well, that's the process of impairing goodwill. Impairing is the process of writing down any asset, of reducing its value. And there are two steps under US GAAP. First, it's the qualitative test and then the quantitative. So, qualitative is non numerical, right? You kind of just assess the overall market conditions. Now, let's say you bought a manufacturing company and now manufacturing companies are struggling, right? So, that's not good. And maybe you should impair the goodwill you created when you bought the company because macroeconomic conditions, right? Maybe there's a recession looming. Maybe, like I said, manufacturing companies are not doing as well. Maybe that company specifically is losing its market value. It's not doing as well financially, right? So, first step is just think about essentially just think about it, right? Are there factors that could lead you to have to test its numbers to see if it should be impaired? Events such as bankruptcy, I mean, yeah, that's pretty straightforward, right? Or significant changes to the company structure, overall, anything such as that. It may not be necessary to do a quantitative impairment test. So it might not be necessary to do basically assess it numerically if after assessing the qualitative factors, these ones, an entity determines, probably an accounting firm or something, determines that it is more likely than not that the fair value is less than the carrying amount. So essentially, you get an accounting firm to come in, and if they assess that, hey, you're good, none of these factors are really going to bring the fair value less than the carrying amount, well, then you're probably good. We don't need to do the quantitative test. However, if the qualitative test, which is this, indicates that there is a greater than 50% chance that the fair value of the reporting unit, which this is the entity you bought, is less than the carrying amount. So carrying amount is on your books, the fair value is what it should be. Then the entity must perform the quantitative test. Pretty straightforward, right? You kind of just test it out first, think about it. Are any of these factors, possibly going to lead it to have a significant decline in value? If that's the case, well, then we proceed. Let's run through an example here. This is going to actually have us do the quantitative write down, right? An impairment loss. Now, I just want to jump over the journal entry first. You're writing down goodwill, right? You're writing down goodwill. Goodwill's an asset. So if you're writing down goodwill, you're impairing it, you're going to credit the asset to decrease it. And remember, you always debit losses, you always credit gains. So in this case, you're debiting a loss due to impairment. So this journal entry should make sense, the debits and credits here. We'll go through the numbers, kind of talk it through and everything, obviously the example, but wanted to just jump forward and kind of give you a picture of what we're looking at. Orwell Inc. has two reporting units, Aldous and Dickens. So these two are the subsidiaries, which have book values, including goodwill of 1 million and 1,350,000. All right. So we need to see, should these goodwill amounts be written down? So Aldous reports goodwill of $100,000 and Dickens reports goodwill of $150,000. As part of the company's annual review for goodwill impairment, Orwell determined that the fair values, including goodwill, were 960 and 1.4 million. So what are we looking at here? We're basically saying, okay, the fair value of the company, including goodwill, we'll start, with these two, are these amounts. The book values are these amounts. We're not really going to care so much about these numbers. I mean, these are going to be important in other cases, right? Like we'll see it down here, but right away, just assessing the value, we're not going to use these immediately. So right here, we see that actually Dickens, the subsequent one, this one should be written up actually by $50,000 because it's actually more valuable than we have it on our books. However, Aldous, this one needs to be written down because we had it on our books for 1 million. It's actually only worth 960. This is going to create a loss. So right here, you see the solution, which should potentially impair their goodwill. 40,000 write down for Aldous and actually 50,000 increase for Dickens, right? That is going to be our answer here. And let's build on that. So because Aldis's fair value is less than the book value, there's goodwill impairment. So it's actually this goodwill that we're impairing. We have goodwill of 100. We're impairing it by 40. So now goodwill is going to be at 60. if Goodwill had been reported at 30 instead of $100,000, the impairment charge would have been capped at 30, right? You can't have negative Goodwill. That does not exist. There's no such thing. So yeah, like we're saying here, if Goodwill impairment was $100,000 and you only have, let's say, 60 left, you cap it at 60. You can't go negative Goodwill. And then here's our journal entry to write down that Goodwill.